a bad day, reset, refresh, start fresh, as Manny likes to say. Get into that mindset of letting the trades come to you, having confidence in your setup, and knowing where your exit is going to be on the risk management side, knowing how much you're willing to risk on the trade. And if it makes you uncomfortable, be always looking for that sort of edginess, that uncomfortableness. When you're uncomfortable is when you can get emotional, when you can make mistakes. If you don't have a really great idea of what you're wanting to do and what the trade setup is and whether or not you want to take it, listen to that. Okay, it's telling you about the confusion in your own mind, which is also likely the confusion in the market and in everyone else's mind as well, right? So when that happens, that's part of what leads us to choppy trades, difficult trading conditions, and trying to force something that isn't really there, right? So we've talked about some of the paradoxes of trading, the Mark Douglas trading in the zone paradoxes that he calls out so well in his book. And it's like that. You have to be able to sit around and be patient and wait for the setups, which means there's a whole lot of time when we're not actually trading, which is part of the paradox, because if you call yourself a trader and you attach sort of, inherently you're going to attach sort of some sort of egocentric, mind trick to that, right? It's like, I'm a trader, so I need to be trading. I need to be doing something all the time, right? And then that's what can get you into trouble, is trying to force those trades. So for the most part, I overtrade. I mean, let's be real here, guys. I like trading. I like trying to analyze, figure things out, kind of, beat, I don't think of it as I'm beating you or the next guy. It's more like I'm beating the machines. But the way that I like to do that is stay small most of the time. If you really are trading just to kind of get a feel of things, which is oftentimes what I'm doing, I'm forcing myself to take a setup, just to sort of get a sense of how it feels. Is the bid firm here or not? We used to talk about making the difficult trade, and what that meant was, if you're trying to buy it and they're bidding it up firmly and it comes down close to you, but you don't get in because they don't quite get to you, and then it kind of starts moving away from you, and then that sort of happens throughout the day, and it's a firm bid. The buyers are in control. Making the hard trade sometimes is paying up, right? Making the hard trade sometimes is getting into the trade, even if it's not quite at that perfect spot that you want. It still might be the hard trade, the one that you need to make in order to catch the win for the day, right? If you're going to try to short this, um, if you're going to try to fade a move, right, and short into a strong bull market, just ask yourself, how easy is it to sell versus how hard is it to buy, right? Just have some sense of what's happening. If you're long and you're scalping out of your a portion of your position, and you go to put your offer in and they just fill it right away, it's an easy fill, right? It's like, oh man, that was easy. That I shouldn't have probably sold there. This thing might be gonna just rip a lot higher, right? So like sometimes you can get a sense of just the simplicity of it, of which side is harder to get the fill on, and that's the side you should try to be on, right? But then use your signals, use your different techniques to try and make that happen in a way that you're confident with taking the risk, which means ultimately that you believe in the risk reward, and you can take the loss if the trade doesn't work out. That's what you have to do. You have to take that loss, and you have to take it where you should take it, right? So um, confidence, preparedness, but also relaxation, um, visualization. I think a lot of people are really good at that, from an athlete's perspective. That's a huge part of success in high performance athletes. Um, let's see here. Okay, well, anyway, so you get the picture. Let's roll into the charts a little. Um, start with crude since they're opened. NYMEX opening on crude 77.49. So I'm not sure what's going on. Maybe the war's over, right? Here's the yellow box, which represents our 5-day ATR. I'm going to assume the high of the day is in crude. I move that down, and look what happens. We've already fulfilled our 5-day ATR range, which is like, I think, $5.65. So what does that tell you? It just tells you, man, they couldn't even fill. They tried to fill a portion of this gap. They couldn't even fill it. Now the sellers have come in hard. So whatever that news is, not sure why my volume histogram isn't working there, but anyway. So we can go around the horn on that. And just as a reminder, down at the bottom, I have my 1-minute charts on the ES and the NQ. I do have a 1-minute chart on the CL as well, but that's on my other screen. And so those are the time frames I trade off of. And then the 15-minute is my bigger time frame here. So on the 15-minute charts, I put these ATR boxes. Okay, I start out by centering them on the Globex session close. So that's right around there. So you can see we made, obviously that was a great rally. We've made a new all-time high here in the ES. It followed through, you know, a little bit. I kind of expected it to test that level yesterday, actually. Of course, they tested in the overnight, take it out to new highs. Um, I would expect there's still some more short covering to be had here, but um, just how much, we'll have to wait and see, right? You can see it couldn't sell off at all through this, you know, big ledge. So if it does kind of start selling fast and hard, then you can expect that they should take out stops and at least get, you know, a retest of the 7,600 level. Um, we'll see if that happens today. That could take a couple days. You know, we've got our jobs number later on Friday. Not sure what we've got today. I think ISM or something today. So that's something to be aware of. Um, but the big thing will be the jobs number. So as we get closer to the jobs number, you could, you know, probably expect a little more two-way action. But today we might just get pretty full on upside follow through. Um, so, you know, I'm assuming we're going to want to be long oriented, right? So the market's open. I'm going to update my orange line as my RTH opening print. So ES opened at 57.5, a new all-time high. So I'll just move that line up. And this is one of the things I do with my ATR box is I just use it to be able to maneuver it, right? So if we want, you can quickly take the box and just say, hey, I think if the low of the day is in and it's in the overnight here and we just keep marching higher and we print a 5-day ATR print, well, you can see where that gets us way above, you know, 7,700 in the S&P. That's the assumption. Now, if we start selling off and put in a hard move to the downside, then we can drag that box straight back down and just align the upper end of it with the high of the day and see where it might be to the downside. But I mean, you can also do the quick math in your head. Our current 5-day ATR on ES is 132 points. So yeah, 76.65 down to 75.33 or whatever. Okay, so just things to be aware of and looking at. If we do the same thing on the NQ, let's update our opening print. Came in 29,234 3/4. Okay, let's say the low of the day is in. This is the one really that has the most juice left in it, right? Because we're nowhere near all-time high. So if the overnight low was our low and we trade up and fulfill its 5-day ATR, which is currently 827.5 points, that would get us to 29,666. The devils. Old Seinfeld quote there. If you remember Putty the face painter. So what are we looking at in NQ? The biggest thing there is the 50-day moving average. I have it coming in at 29,482. Okay, so that's not even, we need to reclaim that and go higher And, then obviously the all-time high is up at 30,975.5. So it's like you've got plenty of room to run here on that trade. And that's why I was saying last week, from our all-time high to the low, the correction in the NQ was on you can see it on my sheet, was minus 12%, right? So I was saying, look, this could be an inflection point either way. We could continue down and sort of go into more of a bear market kind of thing, or this could be a perfect sort of garden variety pullback, and it could be the start of a next bull run. So it's still to play out, except for the fact that it sure looks like the start of the next bull run, and the market's trying to tell us that, hey, the Fed didn't hike, so game on. If they're not going to hike, my interpretation is that everyone has to buy and hold these assets again, as a counteracting force to inflationary pressures, right? How do you fight inflation? Own things, own assets. So that's kind of, I think the picture is pretty clear. I'm very disappointed, really, in the Fed not hiking. When they had the chance, in a situation where the market, everyone says the economy is great, so why not hike at that point? And I'm still kind of worried as to why they didn't. I get it. He's new and he wants to take his time, but under the hood, I'm kind of in my own brain wondering, what else they're seeing, and are they worried about something? Um, you know, maybe not. Maybe they'll be heroes because maybe this thing starts to look bad with some bad economic numbers, and they're glad they didn't hike because they're going to need to cut. I don't know how this will go, but for right now, you can't really fight it. If you want to try to short, just wait for your setups, okay? And so for me, we can talk through that real quick, right? Before we get over to the YM and the RTY. For me, I just use a very simple sort of concept of, if you're above the open, you're trying to put in a green bar on the day. If you're below the open, you're trying to put in a red bar on the day. And then using my moving averages on the 1 minute and the 15 minute, if they're sloping up, that's an indication of a good trending kind of entry that you can take, where it pulls back to the moving averages. Usually I go off the 1 minute, but sometimes I go off the 15 minute as well. And it's that simple. So if personally I'm too weary of going long up here because it's too long in the tooth, that for me, I don't think the risk reward is there. That's fine. But I'd rather see the trade develop into a short signal entry, because it's something that I can measure against my trading system and my trading plan, which allows me to have an accurate and true probabilistic and statistical outlook of what my trading plan is doing and whether it works and everything else, right? So in order for me to have a short signal entry here, I would need price. If we're looking here at the 1 minute, I would need price to reject, come down in here hard, so that the 1 minute moving average, this one here, starts to roll over and reverse, and so then, ideally, would be sort of all we get, and it goes back down and tests the previous all-time high, but sort of turtle soups that and breaks right through, right? And then you'd be ideally looking for pullbacks to short. You can short it right here and expect a retest of the open or of that level down there at the 50. Yeah, you can do that. There's nothing really wrong with it if your trading setup and your trading plan has a setup that's legitimate. But if you just start fading this because your opinion is you think we're too high, that's where you can get into trouble, and you can start fading it and get short. And then the next thing you know, you're adding to a loser because you're annoyed that you didn't just get long, and that, it just snowballs, right? So it's probably great advice for anyone new out there to just not worry about trying to be short. It's a really hard thing to do when markets go up so much more than they go down, so only probably the main reason that I short a lot is because I started trading in 2008. And there was so much great short side bear market action, but there was also incredible face ripping rallies, and government intervention and stuff like that comes out, and if you don't know how to handle yourself and handle that risk, you just get crushed. So okay, focusing back over here on the YM. We had an opening print of 54,001. So ding, 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 another level, another big roundy that gets taken out. Our current 5-day ATR in the YM has grown to something like 762 points. So again, if we think that the low of the day is in, can move this box up, you can see it's already fulfilled its ATR on the day, opened very near where its high is, and now it's back down below its open. And that's a tricky one to overcome because it's had this big move. And when it opens up near the high of the move, then sometimes it's sort of exhaustive and it's hard to get back up above and reclaim that. So that's another sort of style in your trading that you can use if you like being short, or you like the concept of having different trade ideas for different instruments. That's sort of a better way of doing it, in my opinion, is to take, if you're a futures trader, maybe you take the 4 different markets, and instead of just shorting the ES or something, you just look at the 4 of them together and say, well, which is the weakest one of the 4? And then from a relative strength or weakness perspective, maybe you look for some short trades in that signal, but you stay with long trades on the rest of it. Yeah, BD, I mean, you're right. Absolutely. The last 15 years, I mean, practically, right? You get these periods where the short trade pays, and it makes a lot of sense to be going with it. But then ultimately, when you get the reversal, that's the hardest part about trend trading, right? Is that the trend is your friend until it stops and reverses, and you don't until after the fact. And so, yeah, you can continue to play those trend entries. Um, and I guess the thing that I like to think about is when you actually do get stopped out, don't be in a rush to get back in, because especially with a trend entry, if it becomes a reversal, and especially from short to long, um, you could have been thinking, and correctly thinking, that this is a perfect uh, short continuation trade, and you enter, and really you're shorting at the very low of the move, and it reverses and goes, like we've had this big reversal. It's a few hundred points later, you're still trying to short, man. You've just the the problem with it is that when you don't shift to the long side, you miss so many good opportunities to then trade the things from the long side, right? So it's like, um, I'm not the kind of person to tell people never to short. I just think that that's, if you're a trader, you got to be kind of thinking two ways, in my opinion. Um, but it can be really hard to do, um, and the moves can be so quick that if you also don't get out right away, they can really screw you going back up. So RTY, same thing. I just updated the opening print, so we opened back up above 3,000, 3,003. Um, Same kind of thing. We can just update this to reflect if we think that the low of the day is in, boom, and the RTY ATR has gone out pretty far now. It's like 55 points. Um, so, some of these things, like, not only has it been a big move, um, but they've also really expanded the 5-day ATRs on them. And so you just have to kind of ask yourself, how far is that going to continue to go when we have, another big jobs number on Friday? And you should expect that there will be some position squaring. But again, since it's only Tuesday, it might be towards later in the week, right? But I mean, quick glance across the board, you've got a day like this where we open at the all-time highs in ES and YM, right? I think YM did. And we have advanced declines only at positive 200. And so far, a range from 100 to 340. That's not overly impressive, right, for what we're doing. But, that could all change here with NQ now is testing, and I think trying to reclaim this 50-day here, right? What do we say? 482 and a half. So it's not quite there, but it certainly wants to levitate and at least test that. And likely it tests it and triggers more buying and holds, and we keep moving higher. That's the scenario I expect to play out. YM and RTY showing some selling, but I guess that's not too different than what we've been seeing for a while, right? There's been these rotations. If they sell YM and RTY, they could still just keep flowing into NQ and ES here. So we've been open 20 minutes. Doesn't seem like huge, crazy volume and craziness quite yet. Pretty mixed board between the green and red stocks on the S&P 500. Yeah, you could have a little bit of a finally some summer trade showing up here in August, since it's been such a busy and crazy summer. At some point, like people like me, I'm taking vacation at the end of the month and going to Maine for 10 days with my wife to see her family. At some point they're going to start doing that here in August, and these are going to become, difficult trading sessions, which doesn't suit me great because I don't like to have a predetermined trade at the open. I'd rather watch and see what happens than read the market. So, I think when you go into some summertime kind of stuff, and in general, I think it's pretty awesome for the people that are really good at trading the open, that can come in, have a really comfortable idea of how they want to do things off the open, and then do it. And, you can be done for the day and just go do something else if you want, even if you're not doing another job, and just go enjoy the I had to look outside because it's really smoky right here right now from forest fires. But um, all right, so we did have a little bit of a spurt right there. Just checking over at things like the VIX. See what the VIX looks like. This is very interesting, right? Just pull up the VIX chart right now, okay? We opened 15 and a half, and we've traded straight up to 16. Okay, so it's a curious thing if you see the market make all-time highs and the VIX be moving up, right? We'll see if it follows through. And again, I don't follow the news all that well, so I don't really know what's going on in the world, because I don't, what I concern myself the most with is price action. But again, that's something to kind of have your caution flags on. Is you're getting these highs, you're not getting huge confirmation in the advanced declines, and you're not getting confirmation in the VIX, right? So what you can, if you can't stomach the idea of paying up for long entry up here, then you can start formulating what the market might look like in a reversal scenario. Things like, Nvidia diverging, not making a new high here, right? So it tested that pretty important level. It didn't really get through to break out above, I think it was like 212 and a half or 213. It needed to get through that sort of big ledge, and instead it's now failed back down to 210 to 211 here, which should be some support in the overnight. And let's see if that holds. In the meantime, I missed some good entries here off the 1 minute, right? Moving average sloping up, we're above the open, pull back to the moving average, a nice tight stop, and boom, it just gave you 15, 16, could be quite a lot more in terms of upside squeeze, right? If you check on the sheets, you can look at my levels and just try to figure out what could there be up here that might be worth trading against. And the problem always with all-time highs is there's not a lot, right? There's just these pivot numbers basically to look at, or you could look at like Fibonacci extensions. You do have an R2 number at 76.99, and you have a weekly R2 at 76.73 1/4. So look at where that support comes in perfectly at that weekly R2 level. Okay, now on the NQ, we just tested and so far are holding the 50-day moving average at 482. RTY is now exploded back to the upside and making a new high on the day. Crude trading down into the 75 handle. Advanced declines moving out to new highs on the day, now trading up 375. And see if NVIDIA holds. It looks like it kind of wants to hold because I'm seeing the Mag 7 kind of go bid again here. We've got the bond market as bid. And that's kind of what I was referring to with the Fed and Warsh and stuff, why they didn't hike. If we start to see the bond market start to rally hard and interest rates start to drop really hard over the next few weeks or something, don't be surprised. You heard it from me that the Fed might have known something, and they might be more worried about recession than they are inflation. That was my original response, was what the hell are they worried about? This does not make any sense to me at all. So we'll see. We've got a lot of time until that next meeting. All right, let's see if I can get into something here. This was not working earlier for me. No. So I'll need to go into this one. Yeah, we've got our JOLTS data and ISM coming out in a couple minutes here. Factory orders. I guess not. I guess was ISM yesterday. I can't remember. Oh, ISM's tomorrow. That's right. That's why I was thinking that. So JOLTS and factory orders coming in here, and the economic optimism index. About 2 minutes. Look at this rejection in NVIDIA, guys, right? It just swept right down through that support at 211, now trading 209.5, and might have eyes to close the gap, So the way they jammed this up and then reversed pretty hard on this little 1-minute bar, could signify that this is a rejection here of the 50-day moving average in the NQ, and we could be poised to at least go back down and test the open again. This also might have just been the only chance for us to get out if you were short, right? So the long trade could have been right there. It was already right down here. And if the positioning is still too long or too short, they can just keep squeezing them. But like I said, if you're too if you think it's gone too far too fast or something like that, then that's fine. Just look for the divergences or look for the things that set up for you the way you normally trade from the short side, right? Just let it show you first what you want. If you want to be short here, you want to see the long traders feel like, oh shoot, I missed the top, right? So you need enough of a selling price action not only to flush a lot of those people out, but also to cause everyone else to say, okay, I need to take exposure off on the next rally. Like Tesla's on its low of the day. It's not a huge market mover, but if you start to see a bid come into oil, that's another thing you can use. If you start to see bonds roll over and start selling off again, let me see if I can get this configured here. Do a lot of you use, why does it do this sometimes? Do a lot of you guys use Rhythmic? Negative. Okay. Well, for those of you that use Rhythmic and or are interested in the prop firm space, Rhythmic is one of the data feeds and platforms you can use. And I can show you a couple features on it that are pretty cool. Here's the JOLTS number. Job quits 3.2 million. Expected 3 million or so. Factory orders minus 0.3%. That's sort of a miss. Month over month, they were expecting that to be up. Previous, it was down though, so it's sort of an improvement anyways. X transportation still down. Job openings about in line, 7.35 million. Again, I don't know what any of that means, just it's how the market reacts to it. Advanced declines have moved out to new highs again, so we're now trading at 500. So that's a little better than, what I was saying before. What I was going to show on the Rhythmic platform this is pretty cool stuff, is you can go in here to your trader dashboard where it lists your accounts, and you can select your account and right click on it, view risk parameters. And then there are 3 tabs in here, one for your FCM, one for your IB, and then you can click on the one that says risk parameters set by the trader. And so this is really cool because I can go in here and set a risk management sort of program for my own personal trading and style. I have an auto liquidate feature that I have enabled, and then I can use and set multiple criteria here. So I've got a soft loss limit of $250 and a profit limit of 3,500, and then a limited trailing minimum account balance at 1,100, meaning if I lose $1,100 on the day, I'll get liquidated out and locked out of the account. If I make, but this will act as a trailing stop for me. If I make over 1,100, that will lock me in so that I don't have a winning day that becomes a losing day. And then simultaneously, if I make 3,500 bucks on the day, it'll just take me out and lock me out of the system. So it's kind of a cool way of doing risk management stuff. What happens is once you, and then the other thing that I have is you can either have it ignore your open P&L or sort of read your open P&L. And then I also have a thing here where it'll just auto liquidate me at 12 minutes after the cash close. So what's cool is you can set these or change the parameters each day however you want, but then you can set them, and once you click OK and apply, as soon as you put in your first, as soon as you get in your first position, then those parameters are set for the day and they can't be changed for that session. So it's kind of a cool way of managing your risk differently than just using stop orders and stuff. Look at this. Here we go. We're up at our R2 level 99. You know they want to trade the 7,700 figure. We've reclaimed the 50-day on the NQ. And NVIDIA still not participating. I mean, it's up 1.7%. So it is participating in that sense. But the VIX is still moving higher. Okay, so just tells you this could be a little fragile up here. It's also when you have a nice steep uptrend slope like this, it can also be a very cumulative, sort of indicator. And because the NQ still has a way to go to reclaim its all-time highs, that could just mean we really have a lot of legs to go here still. So you could be saying, look, if ES can trade 130 points a day on a 5-day ATR, it's, not that hard to do the math. You could be printing 8,000 by the end of the week, right? If NQ continues to go higher and gets to where it makes a new all-time high, I guess that's the question you'd be asking is ES leading the way on that? Or do you start to see sort of what I was talking about last week, a little bit of that spread coming in, right? Like NQ is down 12% from high to low, and ES was only down like 4% from high to low. So now with ES already at all-time highs and NQ way below them, I mean, not way below them, like it could be back to all-time highs, today, or it could be back to all-time highs in a day or two, right? How much higher would ES be in that scenario? Or would ES be lower because there's some rotation? So the other thing I'm kind of I've been playing with right here is the market if touched order column. Instead of putting my orders in as a limit order, and this is why I liked playing around with the risk management tool side of Rhythmic as well, is because it basically allows me to use stop without putting a hard stop in the market that the algos can see and feed off of, right? They're still feeding on me if I take an entry here and it just goes right through me, they're still going to feed on me, right? But they don't know that my stop would be, they don't actually get a footprint of my actual stop order in the market, because my stop order just gets triggered based on the loss amount instead of instead of having something parked in here. Similarly, I've realized that instead of missing orders because I go in with a limit order, and it just, sometimes it trades at your limit and you don't get filled. Well, you can also use a market if touched order. So say you're looking for this pullback to the 75s. You can put this in as 75 and a quarter. Buy market if touched 75 and a quarter. It asks you how you want it to look. I just use the last price. If it trades 75 and a quarter, place it. And now I've got my buy order down there at 75 and a quarter. And what that'll mean is it just, again, like it's a sort of a concept of, oh, well, then nobody can really see that order. I mean, in theory, I don't really know about this stuff, but it's kind of like you're trying to kind of like hide your cards, not show your cards of what you're trying to do here. Then you can just move it up or down once you've got that order put in, or double click it to get out to cancel it. Let's try one for curiosity's sake. The 99 and 3/4 level offered. I didn't have my volume turned on. Oops. Let's see here. Probably a waste of money, and it just goes straight through it because they probably have a bunch of stops. Getting a slight little downtick here and NQ simultaneously, so maybe I'll be lucky on the divergence. Maybe the seller will come in on a first touch of the 7,700 level. So that one did not fill me. It did not convert to market. So I'm not sure why. There it goes. So 99.5. And if they sell it at all, I'm going to add to it at 97.5 and just see if we get a little bit of a sell coming in. Let's see here. I'm going to take this over here. I'm trying to play with these settings a little bit here. And just see what's happening, how they work. So look at this. You're getting still getting some divergence here in NVIDIA. But advanced declines are pushing out to new highs. 6:30 now on the day. The VIX is still at a high. See if they can retest that 50-day moving average. Probably can't. So this is probably just going to keep squeezing me. There could be a lot of sell stops now that have come in below this 93 level. Looks like I'm going to get stopped out. Maybe I should be stopping and reversing. NVIDIA eyeing its lows, RTH lows, that is. Guess I'll see if I can just get a maybe like a 50% retrace. Probably won't get that. But we might. So I'll just put this bid in here at 87.5. Sorry, let me try it as a market if touched. Okay, I don't really want this to go back against me, so I'm looking at, here's the high of this bar is 0.0 3/4, and the low of this other bar is 98 3/4. So I'll just put it at 99 1/4. So it's just one tick. Probably stop me out, but okay, I'm flat. This is what you want to see if you're looking to short. So when these moving averages widen out, oftentimes they need to come back in somewhat. What you're looking for is something like this where they flush it hard enough to the downside that it causes all the longs to feel like they've missed the high, right? So if it's just a little 10-point pullback, that's probably not enough. It needs to be deeper in here to probably then see this roll over so that the 1 minute starts to slope to the downside. It's kind of trying right here on the NQ, but it really needs to convert some of those to really see that moving average roll over. And then the short entry is the rally back up into and near the highs, because then you have a real good risk reward setup. I mean, I could have added one right in there and just used the high as my stop out point. And I kind of was thinking about it and maybe should have, but you never know, right? They can just come in with another market order. You know, the shorts are trapped and they have to keep covering. You know, they're going to be looking for any pullbacks to try and cover into. So when you see the pullbacks start to stabilize, I mean, you guys are on the long side trade of things. You guys are really good at this, is waiting for that pullback to then stabilize and start to move higher again, and then you get long again. Now you have the VIX came right back in hard. So it just rejected 16 1/4 and traded straight back down to 1587 on the VIX. So, you know, you could have a really good continuation move right here off the NQ, holding that 482 50-day. You know, I think probably 87.25 is still a level I would like, but I just don't know if it's going to get there now. I have less confidence in that now. So I might try one here. And see what I mean? What I was talking about earlier, right? You see how I went to buy that thing at 97.25, and they just bid it straight up above, bid it straight up along with the NQ. And it's like they're not letting you in. It's hard to buy it. So sometimes you can get a sense for what the market's doing based on the ease of whether you can actually buy it or sell it. See that? It's like now they're barely giving us a pullback into this candle. Now you could be looking for a measured move lower here so we basically traded about 12 points. So you could go from the figure 12 points lower would also be a pretty reasonable spot to expect them to pull back to. But what I have a hard time with is this NQ could just have a lot higher to go in terms of that catch-up trade. The fact that it held that 50-day, and now you're seeing it move out to new highs. I mean, we'll see. It could just be rotational, right? You're seeing a little bit of selling in YM and RTY. And so maybe it's stupid. Maybe I should have my bid down here at the 88s like I was talking about, or 87s. And here we go. I got long 97.25. Now I want to see NQ move out to new highs, and ES, if it breaks back above this 01.25 level, then the buying should get explosive back to the upside. So I have an adder at 99.25. And then if they trigger the stops to the upside, you can use the ATR box. Can't even see it. It goes up to about 77.60. This could be just the start of a reversal signal. If they break the low of this 15-minute candle at 93.5, then it could also come back down here and retest this 15-minute moving average. couldn't get much bidding going in Nvidia there. So this could be, yeah, a big reversal signal. But if it tests it and just traps a few people and holds and then goes a lot higher, then I like my adder up there. Right, watching NQ here. This can sometimes be the pullback before the ripper. But it's gone against me. I kind of, in retrospect, that was a nice reversal signal. The question is, can they sustain it? Or does NQ want to keep going higher above its 50-day, that's my theory, right? So I'm trying to stick to that. But if we have some rotational stuff here, then this could be totally stupid to not be getting short right here on a reversal signal. I mean, now I've got truly a trend, a reversal and short setup. But with these kinds of strong plays in order, it's, you also know there's every time it gets people short, those shorts become buyers at some point, right? So if they move it higher, shorts are going to have to cover. Okay, I added one. Now I could try to take one off, if I can get 10 points out of it or something, or I can just try to manage my stop if it keeps moving my direction. Should be able to get a few here quickly, right? So if you want to scalp out of one or two, but look at the NQ, it's right up at its highs. Got Microsoft on its highs. Amazon looks like it's going bid. Oh, I might have missed my chance to take one off. Kind of feel like they really want to probe this thing to see how far it can go, but it's like when it doesn't quite get through, like on the NQ, this could be a double top forming. So in a way, I want to be maybe a little more conservative here. See if I can get one off at 2 1/4. Okay, I got one back. So now I can just put this stop. It's more likely to get stopped out, right? Below 7,700. But what if they just tear this thing now to the upside? That's what I'm looking for in terms of the price action. It doesn't mean it will, but now we've got Nvidia stabilizing a bit. You've got Microsoft making new highs. It's pretty green on the tech side across the board, and again, if this is the move they were waiting for in terms of a recapture of that 50-day on the NQ, then NQ could have a 1,500 point move up day, right? If the low of the day is in at 28.8 and it had a 1,500 point move up day, that would take it to 29.8, 30,300, which wouldn't be even a new all-time high. I mean, you guys might think I'm crazy here, but especially now, if you start to see RTY and YM come into this party and we have a full across the board buying spree, you know, it can really get going. Can really get going. Might have a little divergence here in the NQ, so let's see if it can hold this level. That's why I don't care if the sellers really come in below 7,700. You cannot be stubborn about holding it, right? Because they will target like the 80s, and they will target this rising moving average. So the question is just how far up can they go, before they sort of take enough profit that this moving average can catch up with the price. And so much of managing these kinds of trades is just getting lucky, right? Because at any time a market seller can come in and sweep the book, or a market buyer can come in and sweep the book, right? So, most of the time I'm looking at ways to scalp out of a one or two, portion of my position, and then just literally just hoping to get lucky on the rest of it. Right. Right now, we really want this candle on the NQ to hold. And instead, it looks like they want to flush them. And correspondingly, now it's this candle on the ES. Oh, there we go. So I got a pretty good upside move. It only expanded 2 points, right? And now is reversing hard. So you don't want this candle to get violated, even though it probably will. The low of it is 99.75. So I almost got stopped there. But now, what I want to see, I wanted to see this thing move up through there, but I wanted to see that 1 minute candle close up through there. I want to see a close above 11.25 to then move my stop up to like 7.25, something like that. But when it does something like it just did right there, this could actually flush hard to the downside. But look across the board, and you got now YM retesting its opening, advanced declines again testing close to their highs. So if the advanced declines in YM and NQ all continue this here, you saw what that market action, price action can look like when a market buyer comes in to sweep. It can be very, very violent, and that could just be the start of it. Is if the animal spirits really kick in, you could see this thing turn into an absolute face ripper. And it already has been one. I get that, but you could see this thing go, I mean, face ripper like you've never seen is what I'm getting at. So let's just try not to be overly excited about it, but it still held that level, and it's just now teed up the next level of stops. Now technically it's sort of it's a false breakout, right? So it easily could sweep, and instead of going higher, it could sweep and go quickly 30 or 40 points lower. So you just do not want to be adding to your losing trades. What I like about adding to the winning trades is that hopefully you're participating in the market sweep, but hopefully it sustains. You want to see it sweep, but then sort of never look back. Like if you get a trade that you're adding to your winner on and it goes to a new level and never looks back, those are the ones that you really make your best buck on. So I'm trying to kind of do more with that in terms of adding to my winners. But it's really tricky because you have a little bit of a profit here that you're trying to protect, right? So trading so much in terms of managing uh, your risk, but also managing your profit, is figuring out how you can stay in a trade and not get shaken out, um, and allowing the space, but also understanding that you're going to get these gyrations all the time. Because now anyone who is buying up here on a buy stop above, if they were long traders, they're glad to be getting out here now because they're afraid that this doesn't take out the highs, or they're going to be sitting on their hands hoping that it rips right through, which means there could be fewer sellers than you might expect, right? So let's see if the NQ can regain. I mean, what you really want to see for the animal spirits trade I was talking about is for NVIDIA to recapture that like 214 level, whatever it is up in there. You can look on the charts and see this sort of obvious ledge up there that you want it to recapture. But this is playing out really well here, the way I was hoping it would. You've got a minute and a half left on this 15-minute candle. And if it can expand and print a new high on the close of that candle, then it could be the sign that this thing just keeps going. And again, I'm looking for the 1 minute to close above 11 and a quarter. And then I'd like to move my stop up to protect 8 points and just hope then that I get a runner all the way up through, the 30s kind of thing. You look for maybe a move up to the 60s or 70s at wherever that ATR box fulfills. See, on the NQ right now, it comes in at 29,666. Remember we said that. So I don't want this to be another false breakout here. We don't have our confirmation yet in the Qs, or in NVIDIA, but we're getting it in advanced declines. We're getting it in the YM and the RTY. The biggest trending moves can happen when everything's risk on or everything's risk off. Okay, so about 10 seconds here to see where this bar closes. I'm tempted just to move my stop right now. Right, because I don't want it coming back down below the low of this bar at 08. I didn't quite get the close above. I got the close at 10. I got the high print at 11 and 3/4. So that was close, maybe close enough, This is the kind of the one where it's like, do I take it off? Do I move my stop? if they need to keep lifting their shorts and their hedges, then again, this can be a double whammy in terms of buying, in terms of removing their hedges, but also pouring back into the long side positioning. So now I've got this red bar here, a little bit of a reversal, but it's right at the previous breakout point. So if you start to see NQ go on through, and we could continue to see upside expansion. I do not want to be too greedy with this. And my system tells me to lock in 8 points when I can get it. So I could be a little stupid here not taking it. But look, we're only an hour and a half into the day as well. So there's going to be lots of other trades to take. And now you want to see NVIDIA start to go face ripper. We have a low of this bar, 7 3/4, low of this bar of 8 1/4, and the low so far of this bar of 08. And we got 5 seconds left to the close of this bar. So if they close them up, here we go. NVIDIA's gone bid again. So it's recaptured 210, 211 here. So let's see if this triggers the next wave. All right, so I think for me that's close enough. I don't want it to go back down and take out the lows of this little box right here. Okay, this is a really good pattern that it can break out to the upside or to the downside on. And so it's sort of a systematic thing that I do where if I get 12 points out of the trade, I at least just try to lock in 8 points. Now, my hope is that this would trade all the way up to, say, 34, and then I would look for a stop level to capture about 30 points on it while still holding the trade. Okay, I'm trying my best to stay in this trade because who knows just how hard they can squeeze this thing. Right now we've got YM. Let's look at this. YM pushing up to new highs almost. RTY, new high. Oh, what's happened with the NQ? It looks like it's trying to make a little divergent move here, right? So the best thing would be for NQ to make a little false breakdown and then go higher. The problem for me is that false breakdown probably means I get stopped. But we don't ever know where this thing's going to turn. So you want to have a systematic way of taking and preserving profits. My systematic way is to try my best to stay in a trade if I can, but I don't want to give back profit, right? The part that gets tricky is when they reverse it on you and they go back to your entry point, does that is that actually a great entry point again, or is it the reversal that we talked about this morning where now the trend has changed? I got in at 97 and a quarter, and I added one at 99 and a quarter. And I scalped out of one at 02 and a quarter, and now I'm preserving 8 points on my 99 and a quarter. So I've got my stop at 7.5. But for me personally, this is where I like to just use my analytical skills and try to say, like, it's always some luck of the draw, because it only takes the one trader in the world to come in with a market order and sweep your stop, right? So the rest of what I'm kind of talking through and what I sort of theorize or hypothesize, or whatever the word would be on, is how the market should react if this and this and this is happening. How do I think the market will react? And then does it confirm that or not? It sort of is just a matter of, like, does it keep me confident in things, or do I sort of feel like, maybe I should move that, or you know maybe I should be adding to this right here. um, what's the hard trade, right? That's something Dad and I used to talk about a lot. What is the hard trade? The hard trade right here is to be long, in my opinion, because you know your natural instinct is to sort of say, oh, we've gone too far too fast, and this thing's going to pull back, it's going to pull back, it's going to pull back, and it might, right? Especially now, look at Nvidia again. Okay, it rejected 211, and now looks like it has eyes for lows, right? So again, now it's up because of the gap up. But ask yourself what'll happen to the market if Nvidia completely fills the gap and goes all the way back down to the 200 mark. Just sort of ask yourself that as a theoretical question. Where do you think we would see these markets trade back down to? And what if Nvidia does that, but the markets keep going out to new highs, right? Like, so those kinds of things, I think you can continue to ask yourself as the trade is developing, so that you can understand, like, if you get a huge move in the next 15 minutes where it expands again another 40 handles, or 30 or 40 or 50 handles, you probably just want to be liquidating into that at some point. At some point, you just want to be saying, okay, this is really panicky capitulation to the upside. I gotta take my profit. And we kind of saw that here, and then it did not reverse. Now the NQ is sort of trying to reverse, and I think it will NVIDIA breaks. But now we're still, advanced declines are moving out to new highs again. RTY making a new high. YM looks like it's about to go. So it, you know, there could be a day here like this where we had a very large move in a lot of these names yesterday. And so we might be able to expand a broader market move without a huge participation of NVIDIA or Google. Or in fact, they might be using the move from yesterday as a way to finance the move for today. In other words, they had the move yesterday. Now they can sell some of their profits in those names and move it into the rest of the market. That could be the rotational trade that we see today, right? So those are some of the things that just, it's like, I don't know. NVIDIA is such a huge market cap that if it sweeps these lows right here, which it's sort of teetering on, you might want to be, if you haven't scalped out of some of your long yet, you might want to be, at least just out of prudence sake, looking to take a little off. See if there's another level here on my sheets. I've got 70. I mean, on the pivots, there's really nothing. It's all the way up to 77.94 is R3 level. And on the monthly pivot, that corresponds to the MR2 at 77.94.5. Twos, tens, and 30s acting like, they've reversed. They're kind of testing this big breakout level here. Well, tens are through it, twos are well through it. So the 30 is still testing that breakout level. But look at YM go. And, now if you start to get the NQ joining along again, the only reason right now you would have to be selling is if you're long and trimming. There's really not, you're just too much in no man's land with all-time highs and stuff. Like, you just don't know where that upside liquidity can expand to, because it can get really thin. It can really start acting as a thin market if there are no sellers anywhere up here, because if you're a long portfolio manager, you don't really need to sell right away. You can see how real this is and how high it can go. If your target is, like, I look at my sheet and I say, for instance, the tariff tantrum low to the high, before the last big, huge breakout, the high of 70.43. So the low from 48.78 to 70.43 was a 44.5% move in the ES. We did extend it on the 236 Fibonacci extension. We hit the 75.54 level, which was the 236 extension. but the 382 extension comes in at 78.70. Okay. And the reason I bring that up is because I brought it up previously a long time ago with the NQ, because the NQ was able to hit their 382 extension. I kind of have to go back a little ways to view some level sheets. Let me just look at, say, my July 1st level sheet here. So this shows you the tariff tantrum low, 16,608, to the previous breakout point of 26,399. And look at how the NQ actually hit the 382 extension. It didn't quite get to the 50% extension, right? Because it stopped at 30,975.5. But just in terms of a relative basis, if the ES just gets to its 382 extension off that tariff tantrum low, it goes to 78.70. Now here we go, NQ making a new high. Let's see if the NQ can hit this ATR box at 666. It's not that far off now. YM already hit it and went through it using the overnight low. RTY needs another, I can't tell, but not too much farther, another 8 points or something. Okay, the other thing you want to look for an exiting point is a very extreme tick reading. Okay, so far we just made some new high ticks on the day of around 850 plus. But I'm talking about a tick reading that reads plus 1400, plus 1300, plus 1500, somewhere in there is oftentimes a very good exit point. And it doesn't mean you have to exit there, but you could actually just be, again, diligent about taking a piece off. Or if you get that kind of extreme reading, then just use some candlestick level to, to tighten your stop and make sure you're not giving back. I mean, right here, I'm getting a little nervous myself about holding this, because the market sell orders can just come in so fast, and then I think the whole thing is that the FOMO is partially driven by the fact that if you don't own assets in an inflationary environment, you're going to lose. And that's what sucks for Main Street, because they can't own this stuff as much as Wall Street, and the disparity between the classes just keeps widening and widening when inflation affects, Main Street and the poverty stricken people so much more, right? Um, yeah, I don't think this is done. Here's our little pullback to this was resistance in the NQ. So now it should become support, right? And it's still early in the day, and it's like, does this become a really hard trending day that just keeps going? I mean, because those other scenarios are just like I discussed in sort of that pregame mode, was like, you've got the jobs number at the end of the week that could be, you know, what if the jobs number comes in way better than everyone expects? You know, I don't know. Would the market sell off on that? Because then the Fed would be forced to hike. Would the Fed consider hiking in an intermeeting hike? Because they, would come in and they could come in and say, oh yeah, well, we didn't realize this number would be so hot, and um, you know, we decided we needed to do something right away. That's right, T-Bone. You the man, buddy. Hey, T-Bone, how long have you been trading for the futures? I guess stocks too. I was assuming you were listening to me, but maybe you aren't. All right, this will be curious to see if we can trade a negative tick count here. It went from 870 quickly down to 100, and sometimes these little pullbacks are the ones that look at the NQ. It wants to go out to new highs again here. And what's the next level on the NQ? Did we discuss that? So we're through R1, we're through R2. We've recaptured the 50-day, trading 29,585. So we have a WR2, weekly R2 at 29,645. And above that, I mean, it's 30,000, or these ATR boxes. The ATR boxes work pretty well. And so we have to be kind of thinking to ourselves, like, how much do we expect that ATR to expand? We could see a big expansion on it today, and then we could kind of go into pause mode for a couple days going into the jobs number. I mean, that's sometimes what the market likes to do is they squeeze it up to new levels that never gives you a great chance to get out. So if you're short, you just keep getting squeezed and squeezed and squeezed. And then even where it kind of settles down and starts finally absorbing and balancing at a new level, they can put those shorts on again after they've gotten squeezed out again, and then they get squeezed again. So it can really become again, we talk about this a lot, it can really become a self-fulfilling and perpetual cycle. As the higher it goes, the more they have to buy, you know, and it just keeps reinforcing the cycle that anyone who's caught is hoping for the dip to buy to get out. And so they either buy them on the dips or they have to buy them at higher prices. Either way, they're buyers. So when everyone's caught on, or on the same side is what I was trying to say. When everyone's on the same side, you just want to be ready and really focused and looking for your exit point. Either just have your exit point determined, put your order in there and just do it, take it, or you just want to be ready for whatever the signal might be. If it's a really big expanding bar with high volume and a huge uptick count, then we used to just say anytime we would get them a lot more frequently, it seemed like, back in the day, because the markets didn't seem to rotate as much. It seemed to be that you'd have a lot of these days where it was all risk on or all risk off. You didn't have this huge concentration in 7 names. And therefore, I think we had more frequency of a 1500 tick rating plus or minus on either side. And we used to just say it a lot that anytime you'd get that kind of extreme tick reading, you just take some off. You either cover all of it or just take some off as a matter of course, as a matter of, hey, that's a big extended value and reading and extreme, and you want to be exiting into the capitulation. When people are panicking on one side or the other, you want to be the person providing the liquidity to that, not the other way around. So it could be like a 2-bar reversal that develops. It could be, that you just use the 15-minute chart or something. You just pick something and stick with it and don't worry about it otherwise. But this is interesting because now the VIX has climbed back up from 15.75 to 16.2 again. It's sort of eyeing highs on the day. So I said those are some of the things that you can see that sometimes, you might look back on a day like this and be like, oh, the VIX closed up at 18 or something while the market made new all-time highs, and sometimes that can signal a top. Because what do we really need for a top to be put in? We need all the sellers, all the short sellers to cover. We need everybody to cover their shorts, to have no hedge, everyone just piling in, all in long trading, because then who's left to buy, right? We need that. That's what has to happen in order for this thing to actually reverse hard. I don't see it. But that's the funky part, is the positioning. That balance is what causes the market to move. Right now, the buyers are anxious, so they're bidding it up. And who are those buyers? They're either shorts that are covering, or they're, big hedge funds, institutions, position traders that are paid, literally, they're paid to have positions in the market. They're being paid to put money to work, right? If you're giving somebody, $100 million to manage in a hedge fund or whatever, you don't expect them to just sit on it and cash. You expect them to be pushing the envelope and trying to, get you some yield. And so that's where the FOMO can come in. And it's not so much FOMO as it is just, especially these big, well-capitalized flows, they buy highs, and they, when they're in trending markets, they buy stuff higher, and they just keep, that's why the bid can be firm and stay firm, because they've got program buying going on that says, yeah, just keep buying. I want more. I want more. And where you get the little pullbacks, oftentimes it's those same program buyers that are just literally out of, normal behavior and normal, routine trading. Buy them. Okay, sell some, take some profits on some of that. Buy them, and then they take a little profit. And then as soon as they stop taking some profit, they're the only sellers. And so the market starts lifting again, because now all the shorts come back in, because they're like, oh, shoot, it didn't create, this little dip right here. Oh, shoot, it didn't create a reversal. It's just moving higher again. Now, could it reverse and come all the way back down like this? Yes, it usually does, right? But when, I said this the other day too, when you have these moving averages that just start to look very parallel in shape and slope, in my brain, that typically represents a very orderly, accumulative positioning action. It's just orderly. They're just buying. So what did I say about 30 handles or so? I'm looking for price to print and close above, say, like 33.25 in order to try to lock in my profit of 30 points. So I would look for that push through the 30 level, and then to try and find a spot on the charts where it makes sense to move my stop up. Like right now, I could move it up, say, to the 23s, because oftentimes in the ES, the 25s can be a point of resistance, right? So if it does reverse off the 25s, it could come right back down to the 10s and 7s and stop me out, or the 7,700, or all the way down to this moving average. I can also use my 15-minute chart, my 15-minute candles, and say, look, the low of this candle is 77.21. So I don't want this candle to reverse and become a red candle sweeper, right? You can also use the high point of this previous candle, which was 77.24, because you could say, now that this candle is becoming green and expansive again, it's already made. So let me show this a little bigger. Oh, that's the 1 minute. So on this 15-minute chart, it's already now made it clear that this candle is trying to close green again, right? Because it already probed down into here. It didn't even retest the high of this candle. It didn't even retest the center of this candle, the body. And now it's moving higher. So you still have 8 minutes is the problem. So it can reverse hard in 8 minutes. You never know. But if you're trying to just trail your stop, ideally I want to see this thing put in a really big candle, more like these or bigger, and really, really get going. And then either just look for a spot, to just go ahead and liquidate it, cover it, or just bump my stop up quickly and hope I get lucky on whatever, if it continues to move higher. But I'm getting close. You see how we're getting a little miniature 2-bar reversal right here on the 1 minute chart. You're getting a little bit of sag here in the YM where it made a new high, but then it printed in an inside red candle, and now it still needs to hold this level, right? But I'm kind of getting close here to where I'm like, yeah, don't be too greedy. Mom always said, don't be too greedy. Look at the NQ. It just ticked our ATR box, right? So if the low of the day was the overnight, it just fulfilled its 5-day ATR. It touched that box. Oftentimes it's a natural spot where the algos start pairing their positions, and it can show some signs of resistance. Now, if it goes on through, it goes on through, right? But you just want to use these different concepts to try to understand that, okay, this thing might be nearing its end. Look for the capitulation, right? So we got down to 200 upticks. Now we're back up to 730. Look for a reading of like 1,300 upticks, something like that, and you could have a really good exit into that. And then you might still want to try to get long again on any pullback, but it at least gives you a moment to just relax, take your profit, and move on to the next trade. So here's the low of this bar is 29.25. The high of that previous bar was 30.25. I'm looking for 1,300 upticks. We've got 800 reading on the advanced declines. Microsoft testing 500. NQ hit its ATR box. ES still has about 30 more points to go before it hits its ATR box, but it might not hit it. You know, sometimes they can take a little time coming in. Oh, now you've got a little 1 minute doji bar right here. Oftentimes this can still be a continuation pattern where they take out the low of this bar and then they still buy it on the upside. So the low of the bar is 29.25. And if they don't take out the low of this bar, they can really explode it to the upside off of these 1 minute dojis. So the low of this new bar is 29.5. You've got 13 seconds. Let's see what they do. Now, I might just take it off right here. I do want to move my stop. So looks like I might have missed it. But we'll see. Sometimes they can still buy these. Yeah, I think I missed it, but I never really got that super extreme tick reading that I was looking for. And sometimes you don't get them. Sometimes you don't get exactly what you're looking for. And then it starts moving lower. And then it's like, uh-oh, you know, now all the longs have to be wondering if they're stuck. So the high of this previous candle was 24, right? Can the 24 level hold? I mean, again, here's the VIX. This very curious situation. Now the VIX is making a high on the day, 16.28. So I'm not going to hold this for too long. You know, I really want to see if this gives me one more chance, say at 29.25. That could be what we get. But let's watch the ticks. They got down to about 150, and now can they reverse again or not? You got 40 seconds till the close of this 15-minute candle. So it's a question of, have all the shorts covered? Have they gotten purchased all that they need to purchase or not? So I'm looking for one more thrust to at least try to capture my 30 handles if I can, but I might not get it all the way back up there. I want to see if the advanced declines, I mean the ticks, can give me one final big push here. I'm not sure that they can. That was pretty, that level was pretty good. All right, I'm getting pretty close to just getting out of this here. 600 upticks again, so let's see if they can go with one more big squeeze. I kind of think that's about it for a little bit, but we'll see. I think I'll offer it. Could still go higher, I guess, but you see the longs start to get nervous at some point, right? And there's definitely some offers stacked up there. Look at crude though, trading back down to near its low. So that could be a part of all of this as well. That the bonds are bid, crude is sold off. Mine right now are 339. I have it on a 1 minute chart. Yeah, I probably missed my chance there. That's what Mom always said. Don't be too greedy, guys. See if we get an extreme tick reading here or not. Here goes crude on the lows of the day. There goes RTY out to new highs. I think just in case you want to have something in up here, maybe I'll use 49.25. Hey, that was pretty good. Yeah. If it comes back in, I don't care. I'm locking in my 30 points right there. That's a high tick reading. We got to 900 or so. Let's see if it goes all the way up to like 1300 and fills me at my 49.25 offer. I don't care if it goes the other way. I just don't. You know, that's a good panicky move right here, that it can expand a lot higher, but it could be the end of this whole sequence. Okay, so just give it a second. You can take some off right here if you're getting a little nervous about it. I'm looking to see if I can get a 49.25 print. On a huge uptick reading. So we did get, my upticks got to 1,000 or so on that. All right, I'm flat. No worries. This is a good trade, couple grand. I mean, I should have probably been holding more or adding more to it and using some size, but I kind of needed one there. So now I just take some time to relax. It could likely go, this could just keep going without me, but I followed my rule set. I followed my, liquidation process. And that's all I need to do, right? Is you want your winning trades to pay. So I risked 250 bucks and made 2 grand, right? That's what you want your risk reward profile to look like, so that it essentially now that funds 10 more trades. If I'm not being an idiot, right, then it gives me the ability to live on and keep trading. It's just all about your profit factor and how this stuff goes together. And yeah, thanks a lot, Philly D. What's up, Easy E? Easy C, I should call you. Easy Chris. I'm probably not as good of a long trader, honestly. And so I oftentimes have to force myself to take long trades and then to try and stay in them. But man, I've definitely been the victim over the years of staying too long into a trade, and then when it starts coming the other way, instead of realizing that it may have reversed, I add to it and turn that winning trade into a losing trade and stuff. And so I think it's just very, very important. Obviously, the time frame that you use is super important regardless, for what I'm about to say. But what I'm about to say and what I'm getting at is that I think it's very important to have moments in your trading where you just you get flat, and you step away and you allow yourself to just kind of reset, and just to have, when you're flat, your perspective changes, a lot, right? It's very easy um, to kind of look back and say, oh, I should have done this, or I should have done that. But look, I was nearing a point where I wanted to move my stop to capture that price action. And we had a 1 minute candle there where we printed 11,000 contracts, right? So oftentimes when you see that on the charts, it can be the reversal, and it doesn't mean we won't go higher, but it's the same kind of thing as when you look at a 15-minute chart like this, and it's just been, you've had one red candle in the first, 9, and they've just been green candle buying, buying, buying. And it could just be that way the rest of the day, right? Like my whole thing could be that I got out way too soon, and maybe we trade another 150 points higher or something crazy like that. But more often than not, markets don't move outside of that rhythm so much, right? So it's okay to have your moments where you take your profit and then reset and come back. So I'm going to leave you guys with that. And I hope it helped some. I hope that whatever I'm saying clicks with some people, and or at least, if nothing else, offers you some different perspective and some different ideas and concepts to try to incorporate into your trading. And I'm going to leave it at that, and I'll get my link over to you guys and stuff. And I don't know if you're talking about mine or Manny's, but either way, you're in great hands with Manny as well. So if you're in his room too, or if you're in I Am Pro, all of this stuff, you guys are all awesome to trade with. The whole thing about community is that if you're sitting in here by yourself doing this and trying to figure this out and everything, it can be a lonely business. So I'm thankful for all of you guys. I'm thankful there's people here listening, and it helps my trading. And look at that, I just left another 8 points on the table. So what? You know what I mean? Make sure you live to trade another day. So if you've been fading this thing and you've taken a big loss today, it's okay. Just shake it off. There's always another trade. Make sure you preserve your precious capital so that you can live to trade tomorrow and the next day. All right, guys, have a great one. We'll talk to you later. Cheers.